Good morning and welcome on behalf of AMAS to this first webinar on the series that we will be doing on EU regulatory development on within sustainable finance. This first webinar is about MiFID II. And for this series of webinar, we have the great pleasure to partner with ECOFACT, a legal house specialized on ESG regulatory topics, and within the transition phase where the regulatory landscape evolves quite fast. On the EU side in particular, wanted to make sure we give the opportunity to our members to deep dive into some of those regulatory changes and those that particularly affect them. And so that's why we created in partnership with ECOFACT, the library of fact sheets that are available on our website. For now, we have 4 of them that are available. And the idea is to highlight the main regulatory changes in two pages. And of course, this might not be enough. So the idea with those webinars is really to deep dive into some of those key topics and key changes, and the idea will be to help to all those webinars on a quarterly basis. So you can already save the dates for the next one, which will be on September 19 and December 14. Topics are still to be are still unknown, and for that we'll actually be glad. It's the first time we're doing this, so we'll be happy to collect your thoughts first of all on how this webinar went, if it meets your needs, and if you have a topic of preference or any further feedbacks to make sure that we really fulfill your expectations and your needs. So we're happy to welcome Lana Ollier and Nuria Fernandez from ECOFACT, who will provide first an overview on MiFID II in general. The presentation will last about 40-45 minutes, and then we'll have room for Q&A. The idea of the Q&A is also for you as members to share your experience and your knowledge on how on your institution MiFID II has been implemented, your best practices, and it would be great to hear from some of you on that as well. And so without further ado, I'll pass on the mic to Lana for the presentation. Thank you very much, and yeah, thanks for your attention.
Hi, just 1 second. I will quickly share my screen. Okay, which you can now hopefully see. Sorry, I just had to also unmute myself before I start talking. So good morning from my side as well. We're very happy to be here today and to essentially kick off this collaboration with AMAS. And yeah, it's confusing times for everyone. We just have new regulations popping up left and right like mushrooms. And my boss always makes this analogy with saying, okay, we need to find out which ones are the poisonous, which ones are the good ones. And this is specifically essentially what we do at ECOFACT. We track all types of regulatory developments pertaining to ESG. And this is also how the MiFID first popped up on our radar, which is today's topic, of course. But we also track things like the most recent developments regarding to the CSRD, where the Parliament today with the Council came to a provisional agreement. So our job is very much focused on sorting out those different regulatory developments and making meaning of them. And this is precisely what we'll do today, looking at the MiFID. And for this, I have with me my colleague Nuria Fernandez, who will guide you through the MiFID and through this presentation, where of course we now see that the time is already running out. August 2nd is the deadline here, so we have around 1.5 months to complete our processes here. And yeah, what the MiFID essentially does is it forces investment firms to now really consider essentially in their clients' preferences, sustainability, ESG factors. And this is really essentially in the aim to mainstream sustainable investment, which of course has already been growing and has been a growing field. In Switzerland, the SSF found that between 2019 and 2020, 1.52 billion Swiss francs were invested in sustainable investments. So quite a number. And of course, this was 2020. So it has risen since. And of course, we now also see all this Article 8 and 9 products move into the market in the EU. So it's exciting times with regards to sustainable investment. And again, the MiFID will just probably aim to accelerate those investments. And we have two challenges here, essentially, that I'm sure you're not a stranger to. The first one being the data gap that still persists. The second one being the communication side of it all. So really how to explain those quite technical terms to your clients, which really requires additional capacity building, right? Which you want to start early on with. But also with regards to the data, right? There is a lot of data still missing, you know, and while we can expect the data situation to improve also with the taxonomy, at the moment, we're still like heavily reliant on independent data providers. So from those third parties essentially to fill those gaps. So at the moment, still quite a lot of challenges that we need to deal with and that we need to find answers to in moving this along. And today's presentation will hopefully enlighten you somewhat more on this regulation and how you can face those different challenges. So we will start essentially with giving a little bit of an overview of how we got here, how we're getting on with this deadline approaching August 2nd, what has really changed in the MiFID regulation, as well as the new sustainability preferences regime being the core here, and then the product governance for manufacturers and distributors. And like Aurelia mentioned, we will afterwards be happy to take your questions. Also, if you have questions during the presentation, feel free to post them in the chat functions and we'll then take them up during the Q&A. At the end of the presentation, we'll do a short poll to see what you would be interested in for the next session. So that would be the September and the December one to really pick you up where you need to be picked up and see what you're interested in. So with that, I'll hand it over to my colleague Nuria and yeah, enjoy and thank you.
Thank you, Lana. Thank you for your introductory words. And thank you, AMAS, for having us today to discuss the ESG-related changes to MiFID II. As Lana mentioned, we will start talking about how did we get here and what is the implementation schedule for these ESG-related changes to MiFID II. So if we can go to the next slide. Thank you. So the European Commission finalized last summer its proposed ESG-related changes to MiFID II. These are intended to fit together with SFDR. I guess that most of you are already familiar with this buzzword that SFDR is. And these changes are part of a suite of ESG changes being made via amendments to the AFMD directive and the UCITS directive. However, these ESG changes to MiFID II apply more broadly than the SFDR, with impacts for MiFID investment firms and banks that manufacture and distribute MiFID products. In part, these ESG-related changes to MiFID, as Lana mentioned, are intended to mainstream the consideration of ESG risks and to contribute to a push to put sustainability considerations at the heart of the financial system, which is also an overarching principle of the EU Action Plan on Sustainable Finance. And so with this presentation today, we pretend to give you further details on how these new MiFID II requirements will work and its entry into force. The ESG-related changes to MiFID II that enter into force the 2nd of August require firms to incorporate ESG considerations into their organizational requirements, including the suitability assessments and the risk management and conflicts policies. Then we have a second batch of amendments that will enter into force this 22nd of November of this year. And in this case, the required changes that the impacted firms will need to implement have to do with the product governance of product manufacturers and product distributors. Then we can go to the next slide where we will talk a little bit about what has changed. And so thank you, Lana. So on 2nd of August 2021, the final rules related to the ESG changes to MiFID II were published in the EU official journal. And basically, there are two big changes, one in the delegated regulation 2017/565, and another big batch of changes in the delegated directive 2017/593. So on 2nd of August, the ESG changes related to the MiFID delegated regulation will come into force. These changes were introduced by the Commission Delegated Regulation 2021/1253 and deal mainly with the new sustainability preferences regime. Also related to the new sustainability preferences regime, ESMA issued a consultation paper on the MiFID suitability requirements guidelines in order to include this newly introduced sustainability preferences regime. And I will come back to this ESMA consultation paper later on during this presentation. Then the 22nd of November of this year, the ESG changes to the MiFID delegated directive on product governance will come into force. And these changes were introduced by the Commission Delegated Directive 2021/1269. As this is a directive, the EU member states will need to transpose these changes into their national legislation. And the deadline to do that is the 21st of August of this year. And the deadline, of course, is the 22nd of November, where they will enter into force. As of now, if nothing has changed in the past 20 minutes, there are only 3 countries that have already transposed this directive into their national legislation. So this being said, I think we can do now a deep dive into the new sustainability preferences regime, which is the first amendment that, as I said, enters into force the 2nd of August of this year. And so from August this year, MiFID II requires advisors to assess customer sustainability preferences as part of the suitability assessment. The suitability assessment, I guess most of you're already familiar with what it is, and it's one of the most important requirements for investment protection within the MiFID framework. It applies to the provision of any type of investment advice and portfolio management. And the information to be required from the client includes an assessment of their knowledge and experience, taking into account the types of services, the transactions and investments that the client is familiar with, the nature of these transactions, the volume, etc., etc. The information that is required from the client also includes their financial situation, the source of their income, the client's assets, the ability to bear losses, and also their investment objectives, what is their investment timeline, their risk preferences, their risk profile, etc. Now, as of the 2nd of August, when the delegated regulation will enter into force, portfolio managers and investment advisors will have to take into account the sustainability preferences of a client or potential client when carrying out this suitability assessment. So it adds up another layer of information that needs to be collected from the client. As regards manufacturers, we would expect very few impacts at this time. That being said, however, advisors and managers may feel they need to move well ahead of this deadline. And for example, advisors and managers may ask manufacturers for information and or impose new requirements ahead of this time. So they are ready to begin to comply with this new law by the 2nd of August. So we would encourage you to engage with the relevant third-party firms as soon as possible to understand what are their timelines and what are the information needs, so that you can implement this into your own planning. We would assume that this strand of the ESG changes to MiFID will require a lot of work as of now and until the 2nd of August. If you're not already working on that, this is the deadline. So we recommend that you really focus your efforts towards this, and then we can. Yeah, thank you, Lana. So under this new regime and going forward, it will be mandatory for all investment advisors and portfolio managers to first capture and collect the information about the client's sustainability preferences, and where a client has expressed such a preference, to comply with them when conducting transactions and recommending products. For example, if you manufacture products that are sold and advised to clients in the EU, the private bank or distributor may require you to provide them with the information to ensure they only sell your product to underlying clients where the ESG credentials of the product, if any, are a match to the sustainability preferences of the clients. Again, if any sustainability preferences are expressed. What does this mean in practice? What does the concept of sustainability preference mean? We can say that the concept has 2 levels. First level would be yes or no. Does the end client want to have some of its products to fall within one or more of the following categories stated here? So related to the EU taxonomy regulation, related to the SFDR, Sustainable Finance Disclosure Regulation, or a product that considers principal adverse impacts on sustainability factors. So this first question should be yes or no. Does the client want to have all or some of its products to fall within one of these 3 categories? If yes, then we would go to the second level, and then the end client has to say essentially how much. So for products related to the EU taxonomy regulation or the SFDR, the client has to determine the minimum proportion, presumably from a range of options given to them. And for category 3, or a financial instrument that considers principal adverse impacts on sustainability factors, the end client has to determine what quantitative and qualitative elements will be required to demonstrate the consideration of the PIs, the principal adverse impacts, and again, presumably from a range of options given to them. In order to clarify certain aspects of this new sustainability preferences regime, ESMA opened a consultation. So yes, this is the next slide. On 27th of January this year, ESMA opened a consultation on the draft guidelines on certain aspects of MiFID II suitability requirements, which add sustainability risks and preferences requirements introduced by the last MiFID II amendments. The consultation was closed 3 months after it was opened, so on the 27th of April, and the final guidelines are expected to be published during Q3 this year. Even though the guidelines are still in a draft stage and they are still subject to changes following the input from the consultation, they already offer practical guidance on how to approach the new sustainability preferences regime, and that of course enters into force the 2nd of August. So probably the final guidelines will be published after the entry into force of this MiFID amendment. So this is something that needs to be closely monitored and assessed. Nonetheless, the draft guidelines offer practical recommendations on integrating sustainability preferences into the client suitability assessment. And the main changes included by the delegated regulation and addressed by the guidelines are, of course, the collection of information from clients on sustainability preferences. So identify the client's preferences in order to the different types of sustainable investment products and to what extent they want to invest in. Secondly, the assessment of suitability preferences. So identify the products that meet the client's sustainability preferences. And thirdly, the organizational requirements, meaning provide staff with appropriate training on sustainability topics and keep updated records on the sustainability preferences of the client. If we move to the next slide, we can say that the guidelines also address some special cases that investment firms can face. For example, when the client has no sustainability preference or when the product does not fit the client's preference. So case one could be what happens when a product does not meet the client's initial sustainability preferences. So where a firm needs to recommend a product that does not meet the initial sustainability preferences of the client in the context of the investment advice, it can only do so once the client has adapted their or his or her sustainability preferences. Case two, what happens when the client has no sustainability preference? So where a client does not answer the question whether he or she has a sustainability preference or answers no, the firm may consider the client as sustainability neutral and recommend products both with a sustainability feature and products without a sustainability feature. Case three could be what happens when the investment firm cannot meet the client's sustainability preferences. And then in case the firm cannot meet those preferences, it should discuss with the client when agreeing on a mandate in which the investment strategy is defined and ask the client to adapt his or her sustainability preferences. This decision, of course, should be documented in the suitability assessment. And if the client states that he or she has sustainability preferences and the firm does not have any products with sustainability related features available, they should also be documented in the suitability report. As this new regime is incredibly complex and innovative, and it's not yet clear how advisors and portfolio managers will seek to implement these new requirements in practice, we have tried in the following slide to give you some tips on how to approach these challenges. One initial recommendation would be, of course, that you engage to the extent that you can with industry working groups and trade bodies working in the industry to develop solutions. So I believe AMAS is the perfect forum to do this. And secondly, that you work closely with the main advisors and portfolio managers that you sell to or go through to understand how they are approaching these challenges and this new regime and what may work for them and for you in practice going forward. Moreover, here in this slide, we have listed some recommendations that might be useful when implementing this MiFID amendment. So first of all, we would recommend to establish a working group to conduct the relevant implementation work and prepare a project plan to conduct any necessary internal work. Secondly, build awareness in the relevant internal teams as regards this new regime. This would mean train your teams, train your sales teams, customer relationship services teams, product managers, communications, marketing departments, etc., etc. Thirdly, we would recommend that you map how this may work across your product range, consider what opportunities there are, or maybe for existing or new products, consider what information could be offered and on what basis. Consider how you would deal with changing positions, meaning when a product falls within a client's sustainability preferences on day one but there is a change on day 30 on the features of the product, and consider what legal, operational, or reputational risks may arise. Next should be, of course, to consider the sustainability preferences of the clients or potential clients and identify and document the client's sustainability preferences. And last but not least, and Lana also mentioned that during her introduction, consider any data needs, and if changes are required, what additional third-party data may be required and how this may be sourced. Now, if we move to the next slide, we will talk a little bit about the new product governance regime. So from November 2022, MiFID II requires investment firms that manufacture and distribute financial instruments to consider sustainability factors in the product approval process. And this must also be done for product governance and oversight arrangements for each financial instrument that is intended to be distributed to clients seeking financial instruments with a sustainability related profile. So affected firms will have to ensure they have updated their internal systems and controls, and of course, documentation by the 22nd of November of this year, when these changes will come into force. For manufacturers, right now, it's not clear on the face of the amendments whether existing products must be considered against the requirements of the new law. This is a point to be considered further, and if possible, clarification needs to be obtained from the Commission and from the European supervisory authorities. A middle ground would be, and we assume would be, that products manufactured for the first time after the 22nd of November must be put through the process that is compliant with these new requirements. Also, existing products manufactured on an ongoing basis before and after the 22nd of November should also be put through a process compliant with this new MiFID amendment. And our hypothesis would be that existing products manufactured prior to the 22nd of November of this year, and where the manufacturer is not making them available to new clients or end clients after that date, the product would need to be considered against the new requirements when the next periodic review falls due after the 22nd of November. Also, the new amendment, or the amendment, uses the term sustainability factors. This is defined by making a cross-reference to the SFDR. As you might know, these new regulations coming from or streaming from the EU Action Plan on Sustainable Finance are full of cross-references between them. So this is, of course, the case. The SFDR defines sustainability factors as environmental, social, and employee matters, respect for human rights, anti-corruption, and anti-bribery matters. So in shorthand, we think that this is essentially ESG, environmental, social, and governance. On top of that, the amendment uses various phrases or wordings to refer to clients with ESG requirements or preferences. For example, the amendments make reference to clients seeking financial instruments with the sustainability-related profile, or clients with sustainability-related objectives. And we understand that this should be understood as generic concepts referring to clients with some form of preference for ESG or ESG-related products. If we go to the next slide, we will talk a little bit about what are the requirements for product manufacturers. So first of all, manufacturers should consider sustainability factors in the product approval process and in the product's governance and oversight. In other words, if you're targeting clients or end clients with any form of ESG preference, however positioned or framed, you must specifically cover ESG in your product approval process and in your product governance and oversight arrangements. This is, of course, intended to address the greenwashing risk. Secondly, you should identify a product's potential target market in a detailed way, meaning that when you identify a potential target market for a particular product and specify what types of clients that product would be suitable, you must include, you should do this in a granular way. Thirdly, product manufacturers need to provide distributors with transparent information on the sustainability factors of a product, meaning that you must present the sustainability factors of the product in a transparent manner and provide distributors with the relevant information to duly consider any sustainability related objectives of the client or potential client. And last but not least, you must periodically review products to ensure they are consistent with the target market's sustainability preferences. And you must consider if they remain consistent with the needs, characteristics, and objectives of the target market. If we go to the next slide, we will have an overview of the requirements for product distributors, which mirror extensively the new requirements for product manufacturers. So first of all, product distributors must consider sustainability factors in the product's due diligence, governance, and oversight arrangements. As with manufacturers before, product distributors must consider the sustainability factors when offering or recommending products to clients with any form of ESG preferences. And this is, again, of course, intended to address the greenwashing risk. Secondly, you should implement an adequate due diligence and mis-selling risk strategy. You must ensure that you only offer or recommend products that do what they say from an ESG perspective. This is emphasized from these amendments that the MiFID delegated directive has brought. Thirdly, you should identify a product's potential target market in a detailed way. And last but not least, again, when you periodically review the products you offer or recommend, you must consider if they remain consistent with the needs, characteristics, and objectives of the target market. If we move to the next slide, here's an overview of the governance arrangements for product manufacturers and product distributors. It's a summary presented in a different way of the two slides that I just presented. So we're not going to spend more time on this slide as the content has already been detailed in the past two slides. So now we will deep dive into the EET template, the European Environmental Template. Aurelia was also very interested in have a walk through this template. So as already presented from the 2nd of August this year, and now I will share my screen because I would like to good. I would like to share the EET template. So as of the 2nd of August, distributors will have to start asking investors about their sustainability preferences to determine which kind of funds of products are suitable for these investors. And distribution platforms will need these funds or products ESG data. This is where the new ESG template or EET template comes into place. The EET template is an industry solution It's a standard Excel template used to exchange machine-readable ESG data. This ESG template Excel document has been published by FinDatex, or Financial Data Exchange. And the final draft was published on the 14th of March. And fund manufacturers are expected to provide, if they wish to, the ESG related information to their distributors through this template. FinDatex is a joint structure established by representatives of the European financial services sector, and it carries out standardization work such as technical templates like this one, to facilitate the exchange of data between stakeholders in the application of the European financial markets legislation. And so the EET template consists of 620 fields, so a lot of fields to be checked, being mandatory, some of them, conditional, some of them, and optional, some of them. The fields will change over time, meaning that what is optional today might be mandatory in the future, and depending on the country of distribution, towards the end, some of the fields, like if I go down, there's a section with country-specific information. So some information may depend on the country of distribution of a specific financial product or fund. The information to be provided will also depend on the level of information needed. The optional fields might be requested from the market, even though they are not mandatory, but maybe your distributors would like to have them filled. So the fields are predefined, and no free text is foreseen in the template. Again, this is to facilitate the understanding of this ESG data. And then mandatory fields for the moment are Article 8 and 9 product fields, which can be found a little bit up here. Sorry, you see that 620 fields, it's a lot of fields. So Article 9 and 8 and 9 product specific information, and then other products have limited requirements at this stage. So this means that although it has 620 fields, which seem a lot, only a limited number have to be populated for the first reporting to distributors, and it's expected that as of January next year, so January 2023, additional fields will become mandatory, and they will be SFDR related. Now I will stop sharing my screen. If I know post. So maybe we can go to the next slide. Thank you very much, Lana. And again, as before with the new sustainability preferences regime, this new product governance regime is complex. So in this slide, we wanted to give you some tips that might be useful when implementing these changes. First of all, and as before with the sustainability preferences regime, we recommend that you establish a working group to conduct the relevant implementation work. Then useful tips more directed to product manufacturers could be to form a view as regards the scope of the project and the existing versus new products, and if existing products are considered out of scope, why are you taking this approach? And of course, this should be documented and analyzed. If on the other hand, existing products are considered in scope, there's a need to determine how you will define sustainability objectives and sustainability related profiles. And there is also a need to conduct an inventory of your MiFID II products to identify which of those products, if any, would match the end client sustainability objectives or clients with a sustainability related profile. And then last but not least, we would highly recommend to conduct a gap analysis of your existing product approval processes and your due diligence, product governance, and oversight policies against these new requirements. And with these, I believe that I've covered all the points that I wanted to cover related to the ESG-related changes to MiFID. And we can open the floor now to the audience to share experiences, provide comments, information on how the different firms are tackling these challenges. If you have questions, clarifications, we are open to answer them.
Yes, just a quick note. We will, in just 1 second towards the end, do a little poll. So get your phones ready to essentially scan this. I'm sure you already know QR code. We already got pretty used to this during the COVID pandemic. But first of all, happy to take your questions. And I think we already have the first question in the chat, which is regarding slide 8. So I will quickly go back to this. And feel free to either post additional questions in the chat or just unmute yourself. So the question is, Nuria, is this slide 8, is this only valid for new clients or also for existing?
Sorry, I was on mute. This is of course applicable to new clients, and then it should also be applicable to existing clients when performing the next suitability assessment. So all clients should be assessed on whether they have a sustainability preference or not.
And I think this might also answer the deadline question.
Yes, so we would recommend when performing the next suitability assessment, which of course is performed on an ongoing basis, to implement these questions among the rest of the questions that you would ask to the potential end client or already existing client. So the deadline 2nd of August is applicable for existing and new clients, and for existing clients, this should be assessed on an ongoing basis when performing the next suitability assessment report.
Thank you. For the moment, I don't see any other questions, but keep them coming in whatever form. I believe, Aurelia, there were also some, yes?
Let's maybe the poll, and then I think we have Esther Alas from BCV who wanted to share a bit the experience of the bank and the asset manager on how they implemented MiFID II on their side. That I would first suggest that we start with the poll, and then we'll go into the practice, kind of best practice sharing.
Perfect.
There is no more question.
Then we will do this. I'll also let this open. So essentially, if you scan the QR code, this will be accessible to you the whole time. So the goal would be to know what we can do for you in our September webinar. You sort of now saw the structure of those webinars. With those webinars, as Aurelia already mentioned, always comes a fact sheet. So the MiFID fact sheet has already been provided to you. We see here different options, the CSRD, RTS, PAIs, so all those beautiful acronyms that keep us busy. And if you have other options that you would be interested in, please also specify in the chat functions, or of course, since September is still a couple of months away, also happy to get your feedback in an email if something in the meantime comes up that you would be interested in. We can also take this as an inspiration then for the December webinar, so that we got your needs all covered in the end. So please participate so that we can tailor this to the best of our abilities to your needs.
Thank you so much, and it's already moving in the slide, so I guess people are starting to pick their options. Of course, also happy to get some thoughts on other ideas beyond the 3 topics that we've suggested here. And maybe, so let's move to the kind of best practice and exchange in terms of knowledge sharing also of the different members. And I think that's also very important to keep those webinars practical with key examples beyond the great presentation from Nuria and Lana. So Esther, I think you wanted to share a bit what BCV has done, and of course open to other members as well.
Yes, thank you very much. With pleasure. So I'm Esther Alas from BCV Banque Cantonale Vaudoise, and I just wanted to share our experience with the sustainability preferences of our clients. It's just important to say that we are Swiss asset managers and selling mainly our products in Switzerland. So we are not really subject to the European regulations and MiFID II, but however, as part of the suitability process, since last year, we determine the client's preferences in terms of sustainability. And in the first version, we have established 3 levels of sustainability expectations. The first level concerns customers that are sustainability neutral. The second is for clients with sustainability expectations. And in this category, clients are looking for investment solutions that take ESG criteria into account, and moreover, who want to reduce the exposure to certain activities or sectors. So finally, what was important to us, we referred to the AMAS SSF recommendations of December 2021. So in terms of these recommendations, this means that clients with expectations, it's mainly the objective of improving the risk-return profile of investments combined with the objective of alignment with personal values. So this is the second level. And finally, the third level concerns the client with high expectations regarding sustainability. And in this category, in addition to expectations to protect the value of investment from ESG risk, clients seek also investments that aim for positive change in society and environment. So we have these 3 levels of sustainability preferences. And finally, as part of the portfolio reporting, we produce a report to clients to assess the alignment between the client expectations and the investment products that are offered. And in the first step, we include in these transparency reports the products that are selected by our product selection unit. And in a second step, we plan to extend the analysis to other components of the portfolio as well.
Great, no, thank you very much, and happy that the recommendations from SSF and AMAS proved to be useful in that regards. I'm not sure whether we have other questions, other members that want to kind of share their experience, any difficulties also in the way to implement those changes in the processes and operations from any other members on the line, or any further questions to any of us to back to the question. Free. Looks like everything is 100% clear. Everybody has already implemented this in their operation.
While everyone is thinking about their questions, I'm just quickly going back to the poll. So as of now, we see the RTS and taxonomy are leading. So if there are no changes to this, this would then likely be the September topic, unless something very unexpected happens and we see that this is essentially catching everyone's interest and we get a different kind of feedback. At the moment, it looks like that's going to be it. But again, also, if you are strongly preferring something else, please participate in the poll. You can also do this on the website so that we really cover here what you need.
Great. Thank you, Lana. I guess, I mean, if, yeah, definitely happy to have one team coming out here. If there is no further question, I guess we can close here a bit ahead of time. So then, as mentioned, so the next webinar series of this series on EU sustainable regulations is planned for September 19. So save the date there. The topic is quite that is emerging is quite clear, as we can see. And if you have any questions to Nuria and Lana, you can email them directly. If you've got any further feedback to AMAS, to us, and to all of us on how we can make those webinars even more adapted to your needs, please, happy to answer any questions or and to get those feedbacks bilaterally as well. So thanks again for joining, and thanks to Lana and Nuria on the ECOFACT side. Thanks, Esther, for sharing the BCV experience, and happy to see you next time. Have a very great day. Thanks for joining.